Welcome everyone watching. My name is Julia LaRoche. I'm a correspondent for Yahoo Finance, and this panel is called Test for Alternatives. We are joined today by Yieldstreet CEO Milind Mehere and the co-founder and chief product officer of Rally Road, Robert Petrozzo. Thank you both to my panelists for joining us for this discussion. Thank you to everyone who's watching. I want to kick it off just for those who may not be aware of what your businesses do, where you're disrupting the market, where you're disintermediating. If you can just give an overview. Let's start with Rally Road, and then let's go to Yieldstreet.
Yeah, so the short answer, and thank you for having me too. The short answer is that Rally is, it's essentially the first liquid stock market for buying and selling equity and collectibles. And that's at retail. So these are non-accredited investors. There's no minimums, no commission on trading. Every Friday, we IPO an item, and that's anything from a classic car to a rare baseball card to a vintage book or a watch, anything investment grade with a strong history of returns, all qualified by the SEC. And then after 90 days, we open trading in the app, allowing for a bid-ask repricing of those assets. So on top of that, we run a retail museum in Lafayette Street right now in Soho, which prior to this temporary closing has everything that's currently active in the app on display. So everything from a $100,000 Harry Potter first edition to the 80s era Aston Martin from the new James Bond movie, literally parked in the middle of the store. And anyone who walks in gets that tactile experience and can really leave with a piece of whatever IPO is running at the time.
So thanks, Rob. Thank you, Julia, for having me. So Yieldstreet is a digital wealth and investment platform. And we were founded on the premise that access to and distribution of alternative investments is fundamentally broken, and we are fixing that. So if you are an investor that wants to make money from non or low correlated assets that are away from the stock market, you really were out of luck. And it is much more true in the last 2 months than in the last few years. But we have seen the volatility and seesaw of our portfolios in the public markets. And so Yieldstreet is a platform where you can come to get asset-backed, income-generating products that give you monthly or quarterly distributions that you would otherwise never have across a variety of different asset classes like real estate, shipping and marine finance, art, commercial loans, etc. And so we've been around for 5 years. Actually, last week celebrated our 5th anniversary. We have over 200,000 consumers on the platform. They have invested collectively close to $1.3 billion through the platform across approximately 175 different investment options.
Thank you. Just a reminder for those who are watching, please feel free to comment, ask questions throughout this. We will be watching those. I guess going off of those points, thank you both for filling us in on your businesses. A lot's changed in the last month. We have been met with an unprecedented event with the COVID-19 pandemic. You all were not around as businesses going back to the 2008 financial crisis. So I just would like to know, what's that been like for you so far? How are you thinking about operating your business in this kind of new world we're in? Milind, let's start with you.
Yeah, great. That's a really good question. Frankly speaking, for a while now, we had predicted some sort of market correction or recession, right? Like we all knew that we were in the 7th or 8th inning, just didn't know how long the game was going to be. And so, we felt that, this was our chance to shine and really kind of show that, Yieldstreet not only works during the go-go times, but also during recession. Why do I say that? I don't know if it's going to be really visible here, but I'm going to try. The thesis is that what happens then, so this is the stock market. What happens is in the typical correction, when the market is going down, retail gets really nervous and they sell here. Market keeps going down, they don't get in. Then market comes back up, they're still scared. And then they get in here. What happens is they'll miss this whole opportunity, the U. Who makes money during that? Howard Marks, Steve Mnuchin, John Paulson. Pros that are very familiar with the markets, and when fear psychosis takes over, retail kind of stays out. And our thesis has been that when markets correct, a lot of our asset classes that are asset backed, the yields will widen, and we'll get opportunities from better borrowers as well as opportunities that offer better yields. So we feel that this is our moment to shine, and obviously this is a very unprecedented time, so that's not lost on us, and we've never seen something like this before. So that's why what we are doing right now is just being conservative and really watching the market, because private market comms have still not caught up with public market comms. And but we feel that there is a tremendous opportunity over the next 2 or 3 quarters for us to really show to our retail audience what good underwriting means, and like how we should take advantage of some of these deals that we are going to get opportunities to participate in. So from that aspect, we obviously are very bullish. On the flip side, obviously we have a current loan portfolio, and you are going to see some levels of disparagement there. And the thesis there again is that it's asset backed, so there might be some forbearances or some temporary negotiation that we might have to do. But we have very little exposure, for example, in our real estate portfolio to hospitality. So we generally don't see a ton of displacement, but there will be some displacement. But we continue. We feel that I think this is going to be a great opportunity to educate the investor base and get them involved.
Well, I want to unpack that with you in just a bit. But Rob, how is this pandemic, what we're going through, changing how you all are operating your business? If it's impacting, what are you seeing there?
Yeah, I think it's very similar to Milind's points. I think we Rally as a business, I don't think has the doesn't quite yet have the influence that Yieldstreet does. We won't name names on who's making money on the situation. But that being said, I think that a lot of those points hit home. Like everyone else, the goal has always been democratization for us. And more than that is to create this world where passion kind of meets returns, and you can put together a truly diverse portfolio of the things that you care about. And education's at the forefront of that. It always has been. So what we've seen, at least over the course of the last 2 months, as this is starting to sort of level out in a place where everyone's comfortable at home, everyone's way more comfortable mobile first, even though our core user always has been. We see things like email rates going down, but notification engagement goes up. And we see new user activity going up, even though the spend might be a little bit smaller than it was right now. We see a lot of dry powder that's still sitting, waiting for trading days for specific items that, that's a little bit of a surprise to me as well, where money's not coming off platform. So we're seeing a really responsible secondary market right now for our assets. And we're also seeing that the community is kind of focusing on this in a way where education can lead. Self-education is more accessible than it's ever been before, to see where the equity markets are and not necessarily want to have that same type of risk. The rotation out has been really interesting to see where the money lands on our platform. And a lot of that's been in some of the more niche esoteric items that we're focusing on more now, because the groups that are around those items truly do care about it. They're passionate, but they're also educated on what it's done and what the past performance looks like. And they're willing to make that bet and make that risk on the things that they truly know and understand, as opposed to being at the sort of behest of the equity markets and having the people who have all the money right now dictate where their money goes.
Yeah, Milind, I saw you nodding your head. You all operating, these digital platforms. What are you seeing in this kind of world where we all are work from home? I think there's a lot more connectivity. People are on their devices probably more than ever. I mean, I can personally say I know I've been using mine nonstop. Are you seeing that in your own business?
Yeah, for sure. I think, for us, really seeing a lot of engagement on our content and on our platform, and, people logging in and things like that. I think with regards to us offering new investments on the platform, I think what we have done, and as I mentioned earlier, is taken a little bit of a conservative approach where we're, kind of just really observing the market and seeing kind of what's available to us. I'll give you a couple of examples. So we were actually in advanced stages of doing a big investment in aviation before all this thing happened, and it was with the top 3 US airlines, 12 jets, and 2 jet engines. And obviously that deal is completely put on hold. Similarly, we were looking at a student housing investment, 5 colleges in the Midwest, and that is pencils down for now. So we are kind of trying to reassess where and what type of opportunity we should pursue. On the flip side, we're getting a lot of requests for equipment finance, purchase order financing, in fact, related PO financing related to PPE type of. Nobody's willing to manufacture without actually cash orders, right? And so there is a lot of need in that market given the high level of demand. And so we are seeing those type of interesting deals, and you will see some of them come out on the platform with very attractive risk return profiles that we are excited to talk about.
Gotcha. Well, Rob, I mean, I get your notifications. I know you all have the Babe Ruth 1924 baseball bat that's hitting the, I guess it's going to IPO on Friday. How is this also shaping the deal flow for you guys? I mean, do you rely more on like in-person interactions to kind of bring deals to market?
Yeah, for sure. I'm glad that notification got to you. So that means it's part of it's working. So I'm glad, because open rates are definitely down right now. But the notification, again, has been something that's been working well for us, and a lot of the communication around it. We've always tried to make that personal. I think from a base level customer service standpoint, the immediate response and the ability to have just having a phone number that someone can call right now, or a text, has been so much more meaningful than it ever has in the past. For us, we've always thought about this as a personal situation where it's a one-on-one with you and the app and the items. So we've, for the last year, been starting to move more towards that in-person model. And I think that's missing from finance. So even just in the office, we always have, a few $1 million worth of items that are on hand that haven't hit the platform yet for our team to get fully acclimated with those products that we're releasing. So being like in the office is missing right now. But in terms of the other side of it, we had a slate of big partnerships and events planned, which really contribute to the educational aspect that Milind was speaking to as well, of what alternative asset investing actually is, which is now kind of muted. So the partnerships are still there. The rollout's going to be a little different and change. The tactile element will be gone. But the other side of the coin is that it's a little bit cheaper to run deals for us, and it's also easier for us to find really unique assets in a climate like this, where everybody wants potentially a little bit of liquidity from that item. So we're seeing way more inbound where people have these fantastic collections. They're willing to maintain some equity in it, put some on the platform, but they really want to get a feel for the marketplace, and we're here to do that pretty quickly for them.
Yeah, I kind of sense like there's some synergy, like the DNA between the two of you guys having this conversation. That's why I'm glad you both are my panelists. I think you both kind of touched on this is, how do you kind of boost the appeal, educate that investor base? I guess, what is the value proposition? And is that one of the biggest challenges you all face when it comes to the business and getting folks, kind of on board and used to these asset classes?
Yeah, so if I may jump in, Julia, it's an excellent question. I think, so as Rob alluded to earlier, right, one of the things that happens on our platform is that the demand has been very strong over the last 2 or 3 years. Whenever we launch an investment, it's generally subscribed in a matter of seconds, and these are pretty large investments. And so I think for us, the big question to answer coming out of this crisis is that how's that investor demand going to shape up and change? Are the minimums going to go down? Are the actual portfolio sizes going to go down? But also with regards to will people adopt, and in what way will they adopt alternatives is something that we are very curious to kind of find. As I mentioned earlier, and by the way, my name's Rob, with regards to some of the names I mentioned was actually out of respect, not so. I think that's the great way to do it.
Yeah, no question, absolutely.
Institutional investors have the type of capital and dry powder that they are sitting on, and so I think that's really that's what we are trying to bring to the retail channel, which is like, hey, our power of access to deal flow and understanding of the different asset classes can help you make that extra money in this time of stock market volatility. So I think for us, we basically believe that if we can educate the retail investor, there are people, and Rob kind of also mentioned this, there are people who are sitting on dry powder, even retail investors. And for them, seeing the seesaw of the stock market, what they take comfort from is that can I get some predictable cash flow, especially in these turbulent times, which are expected to last for the next couple of quarters as far as public markets are concerned. So from that standpoint, we feel very bullish that we will be able to kind of tap into that retail demand. And by offering them, variety of these products, we'll be able to engage them and kind of really prove out that concept that I referred to earlier with regards to their participation.
I bring you in here to react to that, and the question, like, how do you educate the investors? I mean, it seems like you all are more in the passion investing class.
Yeah, so what we've always seen, again, it's not that different. I think it happens at a level where the investment size and the ticket size is a little bit smaller, and it's the engagement. Really, we don't necessarily need everyone who comes in to make an investment right away. We want them to be educated. We want them to learn from the group around them. We want them to bring that conversation off platform before they make an investment. So for our core membership group, which is 30-year-old professionals, very tech empathetic, mobile first, maybe $100,000 income, but under 250K net worth, skews male. Right now, like with no sports on, there's definitely less fight for attention for that group right now. So for us, it's like the start of baseball season. So we're going towards where the conversation is already, which is around baseball. Next week, the Michael Jordan documentary airs on ESPN, which has had a lot of hype around it. Everybody's sort of more engaged, and it just looked from a Google Trends perspective on Michael Jordan memorabilia, and the prices are starting to rise. That's a place that we're going to. Like, you know, Tiger King isn't a great documentary, but information moves at hyperspeed right now. So you have to be on top of it. And you have to be able to have a conversation about it right now. It's in every group chat, and we want to be able to do that always. So in my opinion, everyone should aim to do that. You should be an ambassador for the brands that you care about. We're trying to create more of those ambassadors through first-person stories by making sure we're paying attention to what's relevant in the spaces around us right now, just from a consumer and a media perspective, so that the education, it's not something that starts from the ground up. You come in with sort of already acclimated to what that product might be, and we're just layering on top of things you might not know from a financial perspective. So that's worked in the past. It's working way better now, just because I think the fight for attention, you know, Instagram and TikTok and 8 hours of sleep, all of that is time that you're not on a consumer fintech app. But we're getting a little more of that right now, so we're trying to follow that trend as best we can.
Yeah, and I do want to kind of go back to earlier, and I know you all are being a bit more conservative right now when it comes to deals, but you were alluding to some opportunities that you were finding, things around PPE, for example. That was really interesting. Can we unpack, and I want to dig into this with you, Rob, as well, just opportunities. Where are you finding opportunities in this environment?
Yeah, another good question, Julia. So I'll give a couple of examples. You know, obviously we have a very, very robust and active pipeline right now. You know, close to $1 billion of pipeline. And the two examples that I'll give you is that obviously PPE equipment is definitely needed across the globe. And what's happening is manufacturers are demanding cash because there is so much demand for limited capacity that exists. And so what we are seeing is that there is a lot of requests for PO financing, you know, 45-day purchase order financing, 60-day, 90-day purchase order financing, so that our borrowers can actually get access to the PPE deals that they have contracts from, either from the private sector or from the government sector. So that's one big area where, you know, we are obviously like looking into. The other area is speaking a little bit about art. You know, we acquired a company called Athena Art Finance that actually lends against art. So, you know, slightly different than what Rob does, but in a broader context in the same kind of art world. So if you are a gallery or an auction house or a high net worth individual with a really good art portfolio and you want to borrow against that, that's where, you know, we used to lend. And so in that sector, we are obviously, because liquidity has dried up and a lot of, you know, art galleries and our dealers are seeing slowdown of activity. They're sitting on a bunch of collateral and they want to get some operational cash flow out of that collateral. So they're coming to us. Existing borrowers as well as new borrowers are coming to us. So we're seeing a lot of opportunity there. And then of course, real estate being as big an asset class that it is, we are seeing a lot of demand in that area, especially for commercial real estate, multifamily, and like fix and flip type of activities where the liquidity has dried up. And so, you know, we're looking at deals that are at a very attractive yields at this point.
Yeah, on our side, it's similar, but it's also a little bit different. I think that we've always looked at, and me personally, I've always looked at sort of real estate as a smart investment. And that's something that, you know, in times like this, the idea is that when the housing market corrects, it's the best time to buy. It always goes up and to the right. What we've actually seen, which is a little bit surprising, is that some of the more esoteric assets are getting a lot of attention right now, and we're able to bring those niche groups together way quicker than we ever have before. So everybody already knows, you know, a Babe Ruth baseball bat, which goes live in the app on Fridays. This $250,000 piece of history that there's only so many of those that exist. But then we're starting to see a lot of activity around things like vintage literature, some of the more esoteric watch brands, some of the things that haven't necessarily been front of mind for the core group of investors who might have come in from a classic car with the badge of Ferrari or Lamborghini and stick to the staples or the blue chip investments. We're seeing that the buy and the sell. We're able to find things that are way, way more niche. We're able to get access to those because they're usually in one or two places. We're able to price it more.
Okay, great. I think I just missed the last part of your answer, Rob.
I'll give you the quick 2 minutes. Basically, the assets that you would have thought were with a small group that didn't necessarily have a lot of attention from the major group that we have, the full user base, are getting way more attention. They're way easier to find for us now in price. And also investors in small groups they have a really big voice right now. So that community is rallying around some of the less, what people would have thought was the less popular, not the Babe Ruths, the Michael Jordans of the world, but the Charles Dickens, the 300-year-old books and the pieces of sort of watches and handbags that may not have sort of resonated a year ago are way more important now to our investors.
It's interesting. It's almost like creating community. I definitely like just talking to you guys. I can sense like you're really passionate about what you do, both of your businesses. Obviously, as founders, you have to be. So this is going to be a broad question, and I don't know where it's going to take us, but I'm going to ask it. I want to know for each of you, what is the moonshot for you? What is kind of like your ultimate vision for your businesses, and what do you want to do? Like, where do you want to go? What do you want to change? What do you want to impact?
Sure. That's a great question. So the way I would, just taking a step back, right? I think this is the start of a new decade. Nobody knew that the decade would start in this manner, but here we are. My view is that the last decade was the golden age for tech. If you think about top 7 out of the top 10 companies by market cap are tech companies, including Google, Apple, Facebook, etc. And it was really one of the biggest kind of discoveries of last decade was the prevalence of mobile, right? The mobile devices changed, and they changed us along with them, with the advent of apps and things like that. And pretty much every industry got caught up except for financial services. We're still doing ACH transfers based on NACHA rules from 1960s that take 3 to 5 days to clear. And of course, there has been some, some investment apps that had some little traction, trading apps that have some traction. But wealth management and financial planning as an industry has really not been innovated in the last 30, 40 years. So for me, the moonshot idea is that the next 10 years, this decade is going to be the golden age for fintech. And within that, I am very bullish about wealth management, because now we have people who are comfortable with mobile. Our first mobile app investment was from Lake Michigan. I still have the screenshot of the person, probably on his board 2 years ago when we launched our mobile app. So I feel that the next decade is going to be around how do you get people access transparently to investments that were generally reserved for institutional investments or high net worth individuals. And how do you kind of educate them and give the decision making to them? So we have proven that you don't need a financial advisor that advises you. You can show them information transparently and let the investors make their own decisions, which is what they are doing on our platform once you present that investment to them. So I think there are going to be key trends in wealth management that are going to be very, very disruptive in the way we access those financial products, the way we transact with them, and ultimately what are those products we are doing, because we want to fuel our ambitions. We are living very differently than our parents lived, and we are not working at General Motors for 30 years or P&G for 30 years, changing our jobs. How can we move our 401k quickly? How can we get access on demand to investments that fuel our immediate ambitions, generate that income for us, pay back some of our loans, pay for our lifestyle, at the same time keep an eye on the future, and not just have grandparents running around with melancholy music and say, hey, come to us and we will teach you how to do it. I think that all is going to change, and I think that's what I am really bullish about.
Rob, how about you?
Yeah, it's a great question. I fully agree that generational passing down of information is so accessible now that it's changed dramatically. And it's, for us, the question itself is super relevant in that we were talking about this last week. We did an IPO for the moon landing for Apollo 11. It was based around space, and it's where the term moonshot came from. It's used for tech now, but realistically, it's the dedication of all your resources towards this one very specific laser-focused goal. And for us, that's bringing a community together that can invest in the things they actually care about with that transparency that Milind's speaking to, sitting right in the middle of it. And we really do feel like as a business, and I feel like this now in every conversation I've been having with friends or in interviews or conversations, that after all this ends, and it definitely will end at some point and get back to normal in some capacity, being selfish isn't going to work anymore after this, is the feeling. And community for us has always been really important, but in finance in particular, it's something that's missing. I think it's going to be much more prevalent. Putting a face to a product and having a conversation. I do the same thing as kind of Milind speaking to. I still speak to our first investors on text, on the phone all the time, and it was still shocking that someone would give a stranger $10,000 to me 3 years ago, but it actually happened, and now they're a real big part of this community. And those JP Morgans of the world, which are these institutions, they're always going to be here. But private wealth client in the future, I think, looks very different than it does right now. I think it'll be way more self-service, and I think there will be a need for more options and more education, and the aspect of the ability to self-educate, which has been missing for so long, it needs to be there. And for me, mid-30s, a Yieldstreet is way more interesting to someone like me than having an account at Goldman. I mean, not because I don't want a Goldman account, because I know my money's not important enough to be in the conversation there to get first look, but I know there's opportunities now. So I think that $100,000, average investment size, I think has been very overlooked. And in this situation, building community and building the products that give that community opportunities is gonna be super important. The flywheel that goes along with that's super important. The ability to tell your friends and really care about it is super important. We want to create at Rally a position where you can walk down the street and you see a piece of art on a wall, you see a car drive by, you see a watch on somebody's wrist, you hear music coming out of somebody's car. I want someone to be able to invest in all of those pieces sort of seamlessly and in the moment. I think that's where we want to go. That's the moonshot for us, where we want to end up, whether that's tangible or intangible assets.
I love those answers. And I know we only have a couple minutes left. Actually, we have 3 minutes left. You guys are both founders. You're executives at your respective companies. You were just alluding to the community. I thought that was such a really nice thing to bring up too. This isn't related to alternatives, but maybe just from a leadership perspective, how is this crisis we're going through shaping, your views as a leader and the responsibilities that you have as a leader? You can just pick up from there.
Sure. So I think it's there are a couple of things that are really important. I think communication was so important, and communication. Everybody says that you can never ever over communicate. But sometimes what happens is if you're in the office, you're in the thick of things, and that can kind of fall by the wayside. So we do every Friday word on the street, which is we used to do once a month, but now we're doing it once a week. And the entire team can submit questions anonymously, and then we answer, as the leadership team answers them, and as founders answer them. And so I think communication and to kind of keep that focus has been very, very important. The other thing is that to give team the confidence for in this type of crisis has been something that you never had to do like remotely. So now understanding what are the different communication modes and what is the type of information that you can share so that the team is transparently aware of the impact of this crisis that's having on the business, and ultimately it's going to happen for the entire team. So I think that aspect has been very important. The other aspect has been, so we shared a founder's letter, and it kind of went back to my previous point that I made, which is ultimately we view this as kind of a two-sided event, which is, yes, we have some short-term issues with regards to team and morale and working from home remotely, but on the other side of the crisis, we see also opportunity. And so I think to explain that to the team and to be able to get them bought into the team, has been really very, very important.
Rob, we have about a minute. What do you think?
Yeah, I think it's very similar. I see it as sort of empathy is obviously front of mind right now. Over communicate is what we've always tried to do. We're doing it more now. I think the fact that so many of these conversations that would have been phone calls are now done on Zoom or some sort of FaceTime has been important. Seeing a face and having that conversation. For us, a big one that we're treating the way we're treating the business right now is that unforeseen things are going to happen. You can plan as much as you want, but it's unavoidable at times. So the idea of always having something ready to go, but never being complete with that project, trading some of that perfection for speed is something we're thinking about now to be able to iterate quickly and do that as a team in face-to-face as best we possibly can is important, and be able to sort of over-communicate with your investors, with your members on your platform, with your team, and keeping that all in one transparent conversation is something we've been doing way more of recently as well.
Rob Petrozzo, Chief Product Officer, co-founder of Rally Road, Milind Mehere, CEO and co-founder of Yieldstreet. I want to thank you both for your time, and thank you to our viewers for watching this Quarantine Summit, Test for Alternatives. Thanks to my panel.
Thanks so much.
Thank you, guys.